Very good afternoon. And I have to say that last panel was music to my ears. So I'll go off script for a moment and then I'll return. I was particularly pleased to hear the words regulation is not a big hurdle. Where's the gentleman who said that? Thank you. I'm sorry. I'll be quoting you for life. Um, Secondly, when I came in and heard the word taxonomy and it needs to evolve, you're right. The taxonomy is an incredible piece of work. It's a first globally. I would rather we didn't have to do taxonomies, disclosures, transparencies, accountability, that the system would do it, but the system is failing us. So this is our best way of organizing ourselves where we take account of non-financial issues in company structure. I always say that I, in many years ago, did a diploma in accounting and finance. I was bored one particular year, but nobody ever used the word sustainability at that time. We did, profit and loss and balance sheets, return on investment, all those hardcore topics. It is only right now that we move to a place where financial information and sustainability, non-financial information, give you a snapshot of the future of that company, not just its present, but also its future. So I really enjoyed that last panel. And I really liked the fact that you ended on a very positive note, because goodness, we need some good news in these times. So very happy to be here in EFTA House. EFTA and its member states, Iceland, Liechtenstein, Norway and Switzerland, you are among the EU's closest allies. And I think nowhere has that very close relationship been more evident than during the crisis that we now face. The EU and EFTA have been working hand in hand, and together we're standing in full solidarity with Ukraine. It's really important that I recall that. And we are all committed to a Europe based on peace, freedom, and democracy. And I think we all realize that those basic principles are values, if you like. It isn't a given that they will persist. So we should recognize how vulnerable they can be. I want to really stress as I open with this short remark, this very important cooperation during the crisis. And I want then to talk about our common basis for prosperity in the EEA. You work especially closely with us on the single market. I want to address what we're doing when it comes particularly to financial services, given the theme of the conference. This horrible war, so Russia's brutal and illegal invasion of Ukraine, has really been a horror for the citizens of Ukraine. The EU and EFTA are standing, as I said, in full solidarity with Ukraine and its people. Humanitarian assistance, helping with those who've had to leave and flee their homes. One absolutely essential part of that response is our sanctions on Russia in cooperation with our international partners. And in this, the EU and EFTA are closely aligned. And these sanctions are really important to demonstrate to Russia that its actions are not going to go unanswered by the international community. And these sanctions are also targeted to undermine Russia's ability to wage war. As you know, Russia's public finances are under severe pressure already. And this pressure will only intensify as our sanctions on Russia, including around fossil fuel, really start to bite. And as Ursula von der Leyen, the President of the Commission, said in her State of the Union speech, sanctions are here to stay. So this is a time to show strength and resolve on this issue. And of course, sanctions have to be implemented in full to be as effective as possible. So here we want to keep exchanging best practices with our partners on giving guidance, detecting evasion and circumvention. We want also to encourage reporting, and whistleblowing is really important so that we get information out there. This will help us in our enforcement efforts. And it's my responsibility as Commissioner for Financial Services to look after and at the full implementation of sanctions. So, for example, I'm glad to have Switzerland and Norway participate in the subgroup on asset freezing and reporting under the overall Freeze and Seize Task Force. And I would like to thank our EFTA partners for your strong cooperation and support. This is very much appreciated. And that goes not only for sanctions, but also for energy, because as we know, this war has caused problems for Europe as a whole. It has contributed to global volatility, worsening existing inflationary pressures and weighing heavily on economic growth. And of course, it has led to severe problems when it comes to energy security. Our immediate focus is on finding solutions to the current energy supply crisis. And of course, we have as a Commission adopted a number of packages on energy, including a recent package to address the intersection of energy markets and financial markets. And this is a really important point to keep our focus on. And the package focused on easing liquidity stresses that some energy companies have faced in meeting their margin requirements and on tackling the extreme price volatility on energy derivative markets. And I believe that these measures will help to provide the necessary relief to energy operators and to energy markets. And that in turn will help alleviate the pressure on consumers and businesses who are really experiencing severe difficulties because of high energy prices. So that's our immediate focus, both the EU and EFTA, and we're dealing with this horrible war and the consequences of it. But we're also thinking about what does that mean for our future. And one thing is very clear, that Europe needs to build up its resilience. And that will be based also on continuing to reinforce the economic strength of the single market. I always say that we should be very proud of what we've built. I mean, the single market was not inevitable. It was a work in progress. It was a big project. And we should, as I say, be proud of what we've built. Because over nearly 3 decades, we've created a successful and unique model of cooperation with European Economic Area Agreement between the EU and the EEA EFTA states. And that is based on the participation of almost 450 million people in that single market, enjoying similar rights and similar obligations on a level playing field that ensures fair competition. I believe that this suits the needs of both the European Union and the EEA EFTA states, Iceland, Liechtenstein and Norway. It provides a stable and reliable framework for working together. And it ensures that the EU's regulatory approach to the single market is understood and shared with our partners. In financial services, we have done a lot, and I gather from the panel some might be concerned about all we're doing, but I have to say that our work is not complete. So we have big plans for the future. I'm just not available at the moment, so ask them to call back. But one of the really big structural projects, and maybe it was a call about Capital Markets Union, but this is one of our big structural projects because while we are very proud of the single market, we don't have free movement of capital. And it is a work in, if you like, progress, sometimes slow, but we're certainly making progress. It's also an opportunity because something that's unfulfilled has unfulfilled opportunities. So I'm very excited that our work on CMU will bring us really strong results right across the Union. Because this free movement is one of the 4 fundamental freedoms. And as I say, it is incomplete. And it's a core part of the EEA agreement. Our capital markets today are too fragmented, too costly and too small. And we have a huge need for financing, as the panel here were discussing, but that's both public and private, because the future requires us to have money to invest in sustainable activities to create a more sustainable Europe. And we also need to invest in innovation, and therefore private investment is absolutely key. So we've intensified a lot of work on Capital Markets Union, starting with the action plan in 2015. Lots of things are already delivered. And next month, in December, we'll come forward with a number of measures, including a listing act, and that's to make listing on public markets easier and more accessible. And I'm thinking here, especially for smaller companies. On insolvency, we're going to make some proposals on making insolvency proceedings more consistent across the single market. And we'll put forward a package of measures to make our EU clearing landscape more robust and competitive. And next year, we'll have an ambitious strategy to boost retail investor participation in European capital markets. CMU is about building those stronger and more integrated financial markets. And again, the objective is that it will channel investments that we need for our future. And in the current crisis, we need to really massively scale up renewable energy investments. and energy efficiency has to be dealt with, including energy saving measures to reduce our dependency on fossil fuel imports. And as COP takes place in Egypt as we speak, we cannot lose sight of this enormous fight against climate change. Sustainable finance can help make a real difference by directing private money towards the green transition. We need to increase private climate finance to around $3 trillion a year worldwide by 2030, 10 times the current flow of private money. This is an area where we cooperate very closely with EEA and EFTA states. And we're pleased to have Liechtenstein, Norway and Iceland as observers on our member state expert panel on sustainable finance. We have three basic building blocks around sustainable finance. The first one is our taxonomy, which was already given honourable mention, and this underpins the entire sustainable finance agenda because it defines in very detailed and granular terms what economic activities can be considered sustainable to provide guidance for the markets. And that includes obviously renewable energy production, efficiencies around buildings and construction, research into clean technologies. And what the taxonomy does, it gives companies clear goals to reach for, and it lets them keep on increasing their engagement in green activities and to look for financing for those activities. The second building block is our green bonds and our benchmarks. We have the EU Green Bond Standard, and this is currently being negotiated with co-legislators in trialogues. Europe is a global leader in the issuance of green bonds. The majority of green bonds are denominated in euro, and indeed the Commission is the largest single issuer of green bonds. But continued growth in the green bond market also brings new challenges because, as we all know in this room, there isn't quite full consensus on what it is to be green. I have to say that I'm not fond of color coding because I think it leads to shades of green and all sorts of problems around greenwashing. But I think if we are honest with the agenda we face, and if we believe the science, then we really should not hesitate, but to ensure that private money and public money is invested wisely. I would make the point, though, that investing in green is really good, but there aren't enough truly green projects. Investment in transition is where we will make huge gains. And we need to talk and do more on this point because we have enough tools. We just need to make our taxonomy usable, and we will also make sure that it is not set in stone. If there are changes in innovation and technologies, our taxonomy needs to change with those changes. So it's really important that we all agree where the pressures are on our society and economy and invest in them. So this voluntary, and I think Marcel was right in stressing this voluntary green bond standard, really is an ambitious standard that issuers can choose to align with if they want to call their bond a European green bond. And again, it helps issuers prove their credentials and, more importantly, that investors can verify the claims. The third and really important building block is around disclosures and reporting. And one of the big problems in sustainable finance is this topic of greenwashing. So where claims are made on sustainability that really have no, they don't match up. So I think in the past you used to see company reports when people were printing reports with nice pictures and nice claims and maybe nice flowers and whatever. I think we're much more hard-edged about this now. We know that we have to do things, and I think we know we need to measure, because if you don't measure, you can't evaluate. So we're moving really into this area of, disclosures, tough reporting. One measure we've taken to protect consumers who are making investments from this threat and risk of greenwashing is around our sustainable finance disclosure regulation. That's applied since March of last year. And that means financial products that make sustainability claims have to back up those claims. We also have the Corporate Sustainability Reporting Directive. So here, as you heard, companies have to report in more detail what they're doing around sustainability, their plans, and indeed their progress towards a more sustainable company. And it will apply to large financial and non-financial companies. The co-legislators have reached agreement recently And next year, those large companies will also have to start disclosing what proportion of their revenues are taxonomy aligned. So in a sense, while some of the elements are voluntary, the overall approach and objective is that the taxonomy and the disclosure regulation give companies the tools to report so that they can get investment because they have projects that are sustainable, and that those who invest have a guarantee about what they are investing in. It's quite straightforward. We as human beings have a capacity to complicate things, but when this is up and running, I believe it will work, and I think the results will be significant. Digitalization is another big part of our strategy in the European Union. And for the financial sector, digitalization is causing extraordinary structural change. And I think COVID has accelerated that. It was happening anyway, but my goodness, in COVID, people who had never been online are now gurus with online finance. So I think it's been dramatic, and it does show that old saying that necessity is the mother of invention. So we're also seeing new operators in the financial field. We have new applications, new products, new asset classes, all gaining ground. And, you know, digitalization for finance provides real opportunities where you can scale up new ideas and innovation. And our approach to this is we want to harness all the benefits, but obviously we have to be aware that there are some risks as well, and be mindful of ensuring that the risks don't get out of control. In financial services, you know, we have the Financial Services Passport. Any firm authorised in a European Economic Area country on the basis of common rules can offer financial services or products across the single market in different areas of finance. And we're looking to make the most of this in digital finance. We're expanding the financial zone to include crypto. Recently, we agreed on the markets and crypto assets regulation to bring order to what I think everybody calls the Wild West of crypto markets, with stronger consumer and investor protection and market integrity. But it will also allow service providers to get authorized in one country, then benefit from financial passporting to offer services throughout the single market. So even our new legislation around crypto provides for that. Another, I think, really important piece of legislation is DORA, Digital Operation Resilience Act. And the Parliament is due to vote on the final agreement tomorrow. I think I'm in Parliament this evening talking about this. And here all financial firms will need to make sure they can withstand, respond to and recover from all types of ICT related disruptions and threats. And indeed, as we more and more digitalize, I think we need more and more to be aware that the next threat is just around the corner, because if there is a severe attack on a financial system, we know that the consequences would be extreme. I'll just mention as well another innovation where we're allowing companies in a safe and regulated manner to use distributed ledger technology in pilot scheme. And we're saying to market participants, you'll be able to experiment with issuing, trading and selling shares or bonds using blockchain technology. We know that Switzerland is taking a similar approach to this DLT pilot for crypto assets that qualify as financial instruments. And many of the innovations in digital finance, as you know, depend on information. They depend on data. And here, open finance has the potential to drive the development of more innovative, tailored and effective products and services. Companies could get quicker decisions, for example, on loans and financing by allowing access to their financial information. And we as individual citizens could get tailored, for example, insurance products based on sharing our claims history. And financial institutions and fintechs get the ability to offer more personalized products and services. Now, of course, that sharing of data means that open finance needs to be built on trust. That is absolutely fundamental. Trust needs consumer protection measures, and that starts with data protection and measures to protect consumers against fraud and financial crime. Consumers need to know to which data they've consented to give access to and for what purpose. And we need to make sure that more data sharing does not create financial exclusion issues for more vulnerable groups. These safeguards are crucial to build the trust that open finance needs if it is to be a success. And we've been taking time to listen carefully to all sides in an open, inclusive and bottom-up way. And next year, we'll set out the way forward for open finance following a thorough review of the Payment Services Directive. Before I conclude, I want to return to the cooperation between the European Union and the EEA EFTA states. The benefits of our long-term partnership have become even clearer as we face major challenges. And it is good to see the progress made in recent months around the incorporation of EU law by EEA and EFTA members. I've laid out this afternoon very briefly some of the challenges that the financial sector is facing, the EU legislation that we've adopted in response, and our plans for the next steps. I think as we navigate these challenges, I want to stress the importance of keeping pace with the development of EU legislation and, of course, its timely incorporation into the EEA agreement. So the timely adoption of EU financial services legislation in the EEA is important because it's vital to avoid fragmentation in the single market. And it's also vital to help ensure a continued level playing field and fair competition across the European Economic Area for the people and businesses that we serve. The two-pillar approach, where EU bodies represent one pillar and the EEA, EFTA bodies another, has been essential to the good functioning of the European Economic Area Agreement. In financial services, we have a good arrangement to grant the EFTA Surveillance Authority a special role on emergency or mediation decisions from the European supervisory authorities for EEA market operators. And as we look to the future, there's potential to replicate this arrangement for other similar authorities. So the proposed anti-money laundering authority immediately comes to mind in this regard. How the AMLA authorities' powers apply towards authorities and entities in EEA and EFTA countries will depend on how the AMLA regulation is included in the EEA agreement. So, for example, EEA EFTA states will decide whether AMLA should have direct supervision powers in their countries. They may follow the legal mechanisms established for ESMA supervision of EEA credit rating agencies, or they may design a new, unique mechanism instead. Similarly, EEA EFTA authorities may participate in the policy development process of AMLA, like they participate in the Board of Supervisors of the European Supervisory Authorities. So as the EU develops our regulation for financial services in the single market, I want to emphasize that the impact on and involvement of the EEA EFTA states is always front of mind. There is an ongoing dynamic and changing partnership, but always a very close partnership. And I'm glad to join you today to emphasize that close partnership. So as I conclude, it's with a sincere thanks, both for the cooperation that will continue, for solidarity in difficult times. And I think in times of adversity, of times of change and global challenges, this partnership is ever more important. But most of all, thank you for inviting me to be with you. It's been a pleasure. I always like to sneak in before the last panel finishes, just to make sure they've kept the right theme. And I was very impressed with them. So well done. Thank you.